Hey, 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 hey. We're going live a little early today because I have another session with some other people that need to learn a little bit about some live trading of options. And that happens every week. I have a community of people or a group of people, the Options 411. Um, what are they? The Options 411 live coaching. They're the live coaching. And I was trying to share. Tell people we're on here. But I do the Options 411 live coaching every week for the newbies, people who would like to learn how to trade, but they are not sure how. They don't know where to start, don't know what to do. That's what I'm here for, to help them learn to push the buttons, to know where everything goes and goes and goes. That started last week. So if you really want to jump in on that, you actually can go to my website, http educator2trader.com, educator, O-R, to trader, E-R.com, .com, and then you can find us there. All righty. Live on YouTube. Let me tell the world that I'm live. YouTube and Facebook. Y'all tell the people that we're here. We've got some trades that we had going previously that we now need to look at, see what we're going to do with those. And we have some new trades. Some new trades for this week. We got a lot happening this week because earnings is happening. When earnings goes, it happens 3 or 4 times a year. But some earnings, the bigger boys, as you call it, they show up. The bigger boys show up this week. The Facebook's, well, it's called Meta now, and Google, Amazon, um, Microsoft. Those are all the ones that are coming up on in earnings that are coming up in earnings this week. So we'll talk a little bit about earnings before I get off this call. I think the trade of the day, when I put it in tomorrow, I think the trade of the day will be something that comes from earnings. An earnings trade. I believe we'll do an earnings trade tomorrow. So you have to make sure that you look for me tomorrow. Trade of the day. I may do it in a YouTube video or something of the sort. All right, let's go ahead and get ourselves looking at our previous trade. We're sharing our screen. Yes, selecting the window. I'm going to select window 1, screen 1, allow. Then I'll bring this on up. Bring this on up. See where we are. There it comes. There it comes. All righty. So let's look at what we currently have from previously that is waiting to be amended or closed, because I think we got 1 or 2 that actually can close. AMC, we've been hanging around with AMC for a little while. AMC is our 100 shares. We've done cash secure put. So we've done covered calls on AMC. We bought 100 shares and we've done covered calls on it. So I'm going to go look now. Let's see, what's our current price? Current price of AMC is not 440. Current price is 495. We bought these shares for $4.40. So we've got 50 cent per share, which is about $55. We've got as a profit. Notice it says here, right? P&L open $55. We've actually got a $55 profit on this. If we chose to close our AMC shares, we could, our 100 shares, but we're going to look at doing a covered call. Let's go look at doing, as long as you own 100 shares, you can do a covered call and you can continue to do that at a strike price higher. You want a strike price higher than what you paid for them. You don't want to do a strike price lower than what you paid in case they get called away because price falls. I mean, they don't get called away willy-nilly. They get called away because the price falls. But you don't want the price to fall lower than what you had them for, and you get your shares called away at a price lower than what you paid. Not if you don't have to. So the way you can avoid that is you do a covered call higher than current price, higher than what you paid. We paid 440 and 495 or 496 is current price right here. So let's look. If we were to look at 5.5, we could do $5 one, very close. $5 is $17 in premiums. And I mean, that really would be close, but we're really, just planning to give our shares away. And you could. 5.5, you're going to collect $7 as a premium for lending your shares to the market. Let's go out 1 week and see what 5.5 says. We go out one more week, we can do the 5.5 strike for $13. That's a little bit better, right? That's a little bit better. And because you don't need to put your collateral on the line for a long time. And if we paid 440 for them, and if the price goes up to 550, that means we're going to make $110 on our shares, and it will be completely okay with them being called away in that situation. So I'm setting the trade. I'm going to turn this to 15 cents just in case it does really nice tomorrow. I'm changing it to good till canceled. So I'm setting this trade now for it to pick up in the morning when the market reopens, because right now the market is closed. That's why I picked good till cancel. All right, confirm and send. Confirm and send. Let's go to the next one. We got the AMC trade ready. First Solar is a iron condor that we did a couple of weeks ago. It expires this Friday. The First Solar iron condor is going to expire. It's still doing very well. The price of First Solar is 209. We have a 200 put and a 220 call. So that means we need price, or we want price to stay between 200 and 220, which it's perfectly right in the middle. And as time ticks away, it stays there. The premium gets eaten up, which is what we want. It costs less than what we paid for it. You see here, this trade, we took in $90 between 630 minus 540. We received $90 in premiums. But if I were to show you, it is currently worth only $68. See where it says $68 limit? That means if I were to buy it back today or tomorrow, I would buy it back for $68, but I received $90. That means the difference between those two, $22 would go in my pocket. I'd keep it, basically. They already gave it to me. I would actually keep that money if I were to close the trade. I'd have to buy it back for $68. But the difference between the $90 they gave me and the $60 I'm going to pay to close it is that extra money is mine. That's how that works when you're a seller. That's how that works when you're a seller. All right. So First Solar is what's going to keep going a little bit more. It's at a 19% profit at this point. We like to go with at least 25%. So it's still got a little bit of baking time. We are 4 days here from expiration, so we'll have to watch it. When I come back later this week, I'll come back maybe Thursday or Friday and do a like during the day time, so we can see exactly what is what's happening with the trade during the daytime while the market is open, and we can make some adjustments, or we can close, or whatever we want to do while the market is open for us to do it. Okay, looking at Google. Google is this trade is set to close on April 28th, but Google is having earnings in a couple of days, actually tomorrow. Google has earnings after market tomorrow, after the market closes tomorrow. So this is what you have to be mindful of too when you're running a trade, is what kind of are you okay with a significant event that could move the price significantly happening while your trade is going on. And as a seller, you're not necessarily up for that. You don't necessarily want there to be some huge event that happens while your trade is running, because something jumps off, right? Let me see what the option stats are for Google. Something jumps off on your trade, your number, what trade that might have been a really good one, the numbers go really crazy because of earnings, and your good trade is no longer good. Turns out that the calls and the puts are about even on Google, which basically says that it's not real clear whether it's going to go up or down, or the people who already have trades in are basically a 50-50 match. 277,000 people say it should go up. 255,000 people think it'll go down. the put to call ratio is 0.9, which almost a 1-to-1 ratio between these two. So it's not a clear direction on which way it'll go, right? But our trade is, we got a 104 put, and it is currently priced at 105. Right? Currently priced at 105. We may need to go in tomorrow. I may need to go in tomorrow and close this trade just to protect it. It may end up going our way, but we'll see how it plays out tomorrow during the day, and then close it up before the day ends. At this point, it is up about 5%. And sometimes you'd rather just close a trade that is still green than leave it hoping it stays green and something happens and it's no longer green. Right? Even if I'm only going to take in a few dollars, I'd rather take in, keep my few dollars than lose the entire spread because price ran because of, or price dropped because of earnings. So this Google one needs to be adjusted tomorrow. That's what I want you to keep in mind, though, is that if you are doing sometimes these selling trades and earnings is coming up in the midst of between the time that you're entering an expiration, you may want to either not do those, or definitely use a strategy that incorporates the thoughts about how much it may move for earnings, right? Let me go look real quick and see. So for Google, the expected move between today and the end of Friday, the expected move is 5.5. This is expected to move up 5.5 or down 5.5. Well, my trade is 1 point away. I'm $1 away from this, but it's expected to move plus or minus 5.5. So when you're looking to enter these trades, you may want to get outside of this expected move to make sure that if price does swing a bit because of the volatility, that your strikes are not in the midst of that. That means we will be looking at maybe 111 for a sell strike or 100 for a sell strike on the put side, 111 for a sell strike on the call side. And right now we're right in between the fire. We got 104 and 105, 103, 104. We're right in the mist. We need to make a move tomorrow to close that one up. And if we want to enter Google again, enter it in a safer place. Okay, safer place. JD, we have 100 shares of JD.com. We bought them at $36.50, but the current price is $34.65. This is where I was talking about making sure that you get a covered call. We're going to do a covered call here. Making sure you do a covered call higher than what you paid. We paid $36.50 for these JD 100 shares, but we want to make sure that we get a cover call above that $36.50 because we don't want to have to pay or lose our shares for a price that's lower than what we paid. We paid $36.50. So we've got to look at the strike price at least $36.5. Let's go out another week. That was $13. Let's go out to May 5th looking at 36.5 or higher. 36.5 is $40. 37 is actually $30. That's going till next Friday. Going till 11 days, you're going to loan your shares to the market. And if we look at 37 and on May 12th, then that's $54. I'm liking that. I'm liking the $54. Selling a covered call on JD at the 37 strike, 50 cents higher than what we paid for it for 18 days from now. I needed to change that to good till canceled. I don't think I did that. Let me adjust this. I went here. I'm going to cancel and replace order. And I'm going to change this to good till canceled. So it'll pick up in the morning. In the morning. It'll pick up in the morning. Right. Okay. Let's see what we have here. Monitor. We did JD. Silvergate. This Silvergate trade is ready to close, actually. It's ready to close. We took in $15. It's now worth $2.5 or $3. It's ready to close. So I'm going to, looks like we made about $62, but we had 10 of these shares. We weren't supposed to have 10 shares. 10 options call contracts. We were supposed to have one, but I fixed it I fixed my platform where it only puts one in the box now. We're buying it back. Looks like Silvergate, you can only buy it back for $5 or no dollars. So we've got to buy it back for $5, or, we could just let it close on Friday and expire worthless and not have to worry about that. But we're going to go ahead. Oh, let me change that. I got to do a GTC, good till canceled. And we're going to go ahead and close off our Silvergate. That was a bank, I think, Silvergate Capital. Last but not least, we have Zim. Zim, we paid $22. It is currently at 18.49. So we want to trade Zim above $22 because that is how much we paid for it. Okay, you don't want to pick a price lower than what you paid. Let's say 22 or 22.50. We paid 22. Okay, so see, this week, the 22 strike for this week has no monies. May the 5th, 22, $1. Nope, that's not enough for us to put our shares out there. And this is just at the price where we bought it. I'm looking at May 19th, 22, we're up to $18. This is something that's more reasonable. $22, we can, or actually 15, 22 strike, $15. There we go, is what we're going to collect for our premiums. Let's look one more week away and just see. I don't like to go out this many weeks because I just feel like you just have to put your capital out for so long. But that's $6 more. And I don't want to know $6 more for one more week of stuff. Let's go with May the 19th. I'm picking 22, which is the exact price that we paid. So if it reaches that price, we're going to have our premiums and we're going to sell it for the same thing we bought it for. I'm going to be okay with that at this point. Remember, if you have a covered call and it matures enough to where you got a 25 to 50% profit, of the profit that you took in, you can just close it. You don't have to wait till expiration in order to close it. All right. Now let's look at some call credit spreads. Let's look at some call credit spreads. Yep. Let's look first at GIS. These are our new trade. General Mills. General Mills, GIS. I don't know what the I is for. This is General Mills. Okay, if we do a quick look at the chart for General Mills, we can see, I usually take like a general look. Notice how it's been climbing here. Looks like it's hit like a resistance area though. See this peak up here? There was a peak at 88.34. It is currently at 87.62. So the opportunity for this to hit this resistance area and to turn back is kind of high. That's kind of how that works. Okay, I'm going to zoom in a little bit more so we can see what's going on. We can see what's going on between here. So we see this was a resistance area back in December. Yep. And we're back in this area again. Okay. So we may want to keep that in mind. Do we want to do a call credit spread? Yes, we do, because we reach a resistance area. The thought is when you hit your resistance, it may turn back at least enough to give us a couple weeks of money that we can get. Looks like the resistance area is about 88.29 here. The resistance area is about 88, right? Maybe 88, 87.5 somewhere. If we're looking for a hard line, it's more like 87.9, 88. Alrighty, so let's go look at what the trade shows us at 88. We have an expiration of May 19th, which is coming up in 25 days, right? We'll look for call credit spread. I like to look at the strike first to see what kind of deltas at the strike. 90 strike for May 19th has a delta of 23. That means there's a 77% chance it's going to be that the price, 77% chance that price will not get up this high. There's a 23% chance it will get up this high, up to 90. There's a 77% chance it will not. Okay, 87.5, which is right where we saw the resistance, which is where it is right now, has a 51 delta, basically says 50-50 chance it will get here, or it'll be here at expiration. It may not be here at expiration. It may not, right? So let's look at that. I like the 90, 92.5. Let's switch over to the verticals. Vertical. We're looking on the call side because we're doing a call credit spread, which is where we're above price, thinking price will go down, right? So 92.5 at this point for May 19th is paying about $32. So now what you have to think about, $32, you're leveraging $250 because you got a 2.5 spread between these two prices, between 90 and 92.5. There's a 2.5 difference. Times 100 is $250. So you're using the collateral of $250 and you're receiving $32. Well, that's greater than 10% of your, collateral that you're putting on the line. It's about 15%. So it's not bad. That would be good. This would be good. You can do it that way. Your other option could be to do the 87.5 because the price is already here and you're believing it's going to go down anyway, or at least will be down. You definitely think you want it to be down lower by the time you get to expiration, which is 25 days. It's already in the sell zone or in the resistance area. So I like 87.5. I like 87.5. Ooh, we're going to leverage $250, but we're going to collect about 110. That's almost 50% collateral, 50% return on our money. I like that one. I'm going to put in a good till cancel and we'll open that up tomorrow. Now, you have to keep in mind, I want you to think about what kind of trader are you? What kind of trader are you? Are you aggressive or are you a little more cautious? And both answers are good. Both answers are good. Are you aggressive or cautious? Are you, if you lose your money, are you really bothered? Like it takes you weeks on end to get over it? Or if you lose your money, do you say that's just the cost of doing business and you can press on? They're different people. People do things different ways. And you have to, but you have to know who you are and what is your style, right? I have a product where you can take a quiz. You can go to Trading Strategy for You, Trading Strategy for the number 4 and the letter you.com, and you can take a quiz on what kind of trader you are. What's the best strategy for you? I think everybody needs to do that so you can understand yourself and how you respond to the aggressiveness of trading and the money and all those good things. You need to have that. Okay, go check that out. We did GIS. Now let's look at K. I believe K is Kellogg's, the cereal people, Frosted Flakes, and they're great, right? Let's look at the chart for Kellogg's. Looking at the chart on a wide view or just, narrow view, I guess you could call it. Looks like it's up here hanging around in some type of resistance area here. Looks like there was one here and then there's another one there. Yeah, and I got to spread it out now so I can see what's happening in between there because I can't see it just yet. Some peaks and valleys might have happened in there. Here we go. We got some peaks and valleys. Now I'm seeing that there is a support area right here. There's a lot of support happening right in here between these two. Maybe it's hanging out between these zones, between the 68 and the 67. It's like it may be hanging in here a bit. We can another little resistance here up at 69. But notice if you look back over here, you see there was a lot of support even in this same zone here with that 67. I think this is a pretty good little place here, 67. And if you wanted to look at doing an iron condor even, it's been in this area, this zone now for all of this month, right? You could actually maybe go up a little bit to 69, maybe look at an iron condor between 67 and 69. Ooh, we were only here for the call credit spread. Look like we might be able to do both. Looks like we might be able to do both. Okay, so here we go. We've got, go to trade. May 19th again. What did we say? We were going to look at 67 and we were going to look at 69. 67 on the put credit spread side and 69 or 70. Looks like we only have it's a very thin, it's a thin line. You might want to, it's another 2.5 spread, May 19th. If you wanted to do 62.565, you would collect $32 on that side. And if you were going to do, let's say 72.5, you'd collect another $30. So you'd collect $60 total for your $250 of collateral. That's a 20% return on your money, believing that price will stay between 65 and 70. Well, let's give ourselves a little more information. It says here this expected move is 2.8, believing that it won't move up more than 2.8 or down more than 2.8. So if you pick 3, go down 3 to 64, 65, go up 3 to about 70, you're going to be right in the zone. So let's do that. 70, 72.5. I'm putting this as good till canceled, doing us one of these call credit spreads. It'll pick up tomorrow. And going down to 62.565, good till canceled. Now, this is one thing I want you to know about this. Because you are doing an iron condor, you have 70, you've picked the 70, 72.5, and you've picked the 60, we picked the 62.65. Price cannot be in two places at once. So we're using the $250 of collateral for the put credit spread and $250 of collateral for the call credit spread. And we've only used one set of collateral. It don't take the same collateral twice. It'll take it just one time because price cannot end in both of those places. The broker knows that if price is at 70, then it's definitely not at 65. It can't be at two places at once. So once you enter this trade, that's why people like iron condors, because you can use one set of collateral and collect money on two sides, on the put credit spread side and the call credit spread side. Okay. Good move. I got one more, and then we are going to be on our way. My last one we're going to look at is Home Depot. Home Depot. I'm going to go ahead and expand this out so we can see a little more perfectly what's going on with our chart. Home Depot has a gap up here that's kind of hanging out. Home Depot has this gap right above here that's big above the price. It goes from 317.93 all the way down to 305. That's about a $12 gap. That's a little bit above current price. This gap, though, will operate as a resistance zone. It will operate as resistance because this is a seller's gap. People will go up in here and they'll sell and they'll bump up, bump back down, bump back down. There's people who want to sell hanging out in here. So as soon as the price reaches here, they'll sell and the price will come back down. That's how that works. So we can look at what will be a good place for our call credit spread strike, with that being the case. Let's go to the trade. Looking at 519 again, and we said the 305 was the bottom of that gap. So if we went to look at 305, 310. Now the difference here, 305, 310 is a 5 spread. It's a 5 spread, which means it's going to require $500 of collateral. 5 spread, May 19th, taking in $225. So you take in almost 50% of, did I pick the 305? Yes, I did. You take in almost 50% of your collateral. Now you could go up one more, 310, 315, give yourself a little room and take in $170. I like having a little bit of room. Let's look here. The expected move, though, it says between now and May 19th, it's expected to move about $18. Well, 310 only puts us at about $10. So we might want to look at 320. 320 provides to us $81. $81. We're leveraging 250, but we're collecting 81. That's about 30% return on your money. I think we should be safe. We would be better to be safe than sorry. So let's go with 320, 325 there. Collect our $80. We'll maybe make it $85, give us a few little extra coins, and that'll be our call credit spread on Home Depot. All righty. So we've covered some new call credit spread trades. We've updated the trades we already had going. Don't forget, if you are interested in option seller, first thing I want to ask you is to go ahead, like and subscribe to the channel, because we do some good seller stuff here and you don't want to miss it. You don't want to miss the good stuff that we're doing here. So go ahead and like and subscribe to that. And I wanted to show one more thing. Let me see where it is, see where I put it. One more thing. We want to look at is this it? The options bundle. Are you opening up? Doesn't seem like it, and it's opening in the wrong screen. Oh, there we go. Opening in the wrong place. There we are. The option sellers course bundle. Basically, it's a bundle that I have put together that includes all of the seller strategies that we use as option sellers. We got credit spreads, covered calls, cash secure puts. We've got a strategy that includes that you trade every day on SPX, and you've got short selling here if you're going to be a short seller of shares. If you don't know anything about options, we've got Options 411 to introduce you to options as a seller and then lead you into the other courses. That's available on my website, educatortotrader.com. Okay, you can go over there and avail yourself of that. All righty. So I believe, let me stop sharing. I believe I've covered what I wanted to cover today. Yes, I've said what I wanted to say today. Hey there, Shondell. Put the website here into the comments, educatortotrader.com. All right. You can go there and look for the option sellers bundle. All righty. You all make sure to look for me on Mondays. I like to come and do my market Mondays, and then I come back later in the week to update the trades that we put on. All right. I'm going to bid you all a fond farewell. You can't see my goodbyes. I say goodbye. Goodbye, everyone. Goodbye, everyone.